This is Horizon's Middle East and Africa. Our top stories this morning. Record hike. The yen strengthens against the dollar after the Bank of Japan hikes rates to 0.5%, the most in 18 years. Softer tone, Chinese shares rise and the offshore yuan extends gains after Donald Trump tells Fox News he'd rather not have to use tariffs on China. And Davos headliner. President Trump uses his much-anticipated address to the World Economic Forum to signal he'll ask for oil price cuts from OPEC Plus, as well as greater investment from Saudi Arabia. Well, it's just gone 8 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jumana Basetchi. And we're going to be bringing you interviews from Jumana on the ground in Davos. She's been speaking to all the movers and shakers from this region. But of course, the headliner yesterday at Davos was Donald Trump, a remote speech given to that audience, and we're feeling the Trump effect on these markets. He sent Wall Street to record highs. Stocks futures pointing a touch lower this morning, though. We also saw the reaction in oil. He was calling for cheaper oil, and you've got Brent down 0.2% now. He called for rate cuts from the Fed, and you saw the reaction at the 2-year yield, the more monetary policy sensitive end of the curve, but caution actually at the 10-year end. So 4.6% is where we are on the 10-year yield currently. And you saw the pain in the dollar, and that's still weaker, 0.3%. But if we flip the board, I just want to put the oil moves into context. If we look at WTI, we are on for the longest losing streak since December 2023. This fall here at the end of the chart. And we're going to be picking up on that oil theme throughout the programme, because President Trump's exhortation was specifically pointed at this region, Saudi Arabia, so we'll dig into that later. But let's go first to Asia. Avril Hong's on standby for us in our Singapore studio, because Avril, it looks like the yen can't make up its mind on this BOJ decision. Tell us more.
Yeah, we've been seeing a bit of fluctuation in the Japanese currency, but more recently, in the past, I think 30 minutes or so, it's actually managed a climb. And I think as the BOJ hiked 25 basis points, this was as expected. But what I think some are latching onto is its upgrade of the core inflation forecast for this year, along with it talking about how it sees inflation sustainably above 2%. So to some, this is not the dovish hike that was expected from the BOJ, and the yen climbing as a result. Now, the other thing that we're watching in markets in Asia today, the outperformance in Chinese stocks, especially what you're seeing on the Hang Seng, almost 2% higher into the lunch break. And it's gotten this assist from Donald Trump talking about how he would rather not use tariffs on China. And this is following on from a string of comments that point to a more positive tone between the US and China. You think about the phone call earlier in the week, that reprieve for TikTok, and then that talk about 10% tariffs, not quite 60%. So you're seeing outperformance in Chinese stocks as well.
Yeah, that Trump-Xi relationship, really the soap opera of the week. Avril Hong in Singapore, we thank you for that update. Let's dig into what Donald Trump had to say. He was telling business leaders and political leaders, all of whom gathered in Davos this week, that he's going to ask Saudi Arabia and the other OPEC nations to bring down the cost of oil. So Trump says that higher crude output would heighten pressure on Russia to end the war in Ukraine. He also says that he's planning to ask Saudi Crown Prince Mohammed bin Salman to invest even more in the United States. Take a listen.
It's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them.
Well, joining us now is Paul Wallace, who leads Bloomberg's MENA economy and government coverage. Good to see you, Paul. Trump wants $1 trillion out of MBS. Is he likely to get it?
Hi, Lizzie. Yes, in Trump's world, $400 billion is just a mere rounding error. Look, Crown Prince MBS spoke to Donald Trump the night before last, and the Crown Prince, according to a readout from the Saudis, said that he was willing to up investment and trade with the US by $600 billion in the next 4 years. Even that sum did raise some eyebrows with people that know the Saudi economy well and also know what its stance with the sovereign wealth fund has been in recent years. It has been pivoting to more local investments, that the sovereign wealth fund that is, and also $600 billion of increased investment and trade is a lot. That's 55% of the kingdom's GDP. So take that to $1 trillion and you're stretching it even further. But I think, as always with Donald Trump, sometimes the details themselves are not all that important. It's what he's signaling. And he clearly wants some kind of deal or some kind of agreement from the Crown Prince. And, the fact that he called him a fantastic guy is no doubt very good in the eyes of the Saudis. Trump and MBS did have a warm relationship during Trump's first term. So they probably can do something. I mean, whether we'll ever see, whether we'll see $1 trillion of extra investment in trade from the Saudis with the US in the next 4 years, that, as I said, is a stretch. But I think we certainly could see Saudi Arabia pivoting a bit more towards the US in terms of investment and trade.
Well, the other signal that Trump was giving was about China. He said that it was actually President Xi who called him on Friday. And then we had this Fox interview this morning, Paul. He says he'd rather not impose tariffs on China. Do you think all of this suggests that behind the scenes, Beijing might be willing to comply with Trump's demands?
I think so, perhaps at least to a certain extent. It's quite hard to tell with Trump whether his initial demands are sort of setting the bar high to get negotiations rolling, and whether he'll actually accept a lot less than what he says on the surface. But the fact that he says he'd rather not impose tariffs on China, I think, shows the route he'd like to go. He wants some kind of deal with Beijing, and the signals are from Xi and others there that something can be worked out. Whether it's good enough to satisfy Trump, we'll just have to see.
OK, Paul Wallace, leading our MENA economy and government coverage. Thank you, as always. But, of course, those weren't the only announcements from Donald Trump last night. It's the theme of the week that we get so many different announcements in one speech. He's also signed an executive order creating a working group to advise on digital asset policies. But some crypto bulls were left disappointed that it didn't specify Bitcoin as the centre of a new national reserve. Trump was joined by White House advisor David Sachs, who says that the order will help make the US the world capital on crypto.
You find them exciting? They might not be exciting, but we're going to make a lot of money for the country.
Thank you, sir.
And so is David. You have to check him out. There's nobody like this guy. They said, how did you get David Sachs? How did you do that? And he's doing it for the country more than anything else. So we appreciate it, David. Thank you very much.
Well, Bitcoin's still pushing towards $104,000 this morning. But the other big story in the markets this morning, of course, is the Bank of Japan. As Avel was mentioning, the Bank of Japan raising its key policy rate to the highest level in 17 years as Governor Ueda continues his mission to return to central bank orthodoxy. The Asia Trade co-anchor, Sherry-Ann, joins me now from Tokyo. Morning, Sherry-Ann. So, this hike very much baked in. We knew that this was coming, really. It was very much the expectation. But it was interesting that we saw the yen slightly weaker at first, but this isn't necessarily a dovish hike.
Yeah, it was really interesting to see the Japanese yen reaction because, as you said, 25 basis point rate hike was already priced in. It was actually very well choreographed by both Governor Ueda and his deputy Ryoso Himino in the days leading up to this rate hike. But at the moment, we have seen those losses being reversed. Still, when it comes to the actual outcome and the moves in the markets, I want to say perhaps the BOJ has so far succeeded in making it a very boring meeting and as pretty much expected. Remember what happened in July when we saw that huge trigger of unwinding of carry trades, the global market sell-off, the Nikkei seeing its biggest plunge in history on August 5th. So we are not there. The markets are relatively calm. The BOJ actually signaling that we have seen global financial markets relatively calm. That was another variable if we had seen a lot of surprises coming from the Trump 2.0 administration. But given that the stage was set with inflation numbers also this morning, core CPI accelerating past that 3% level for the first time in 16 months, this was pretty much baked in, but we still have Governor Ueda's press conference to go.
Yeah, I'm sure he's hoping it's another snooze fest after all the chaos last summer. But just how has the outlook changed? Because we were talking to Avril just a moment ago about how perhaps that's what's driven the yen move.
Inflation expectations from the Bank of Japan have been increased. So we are now seeing the bank boosting its core CPI forecast to 2.4% from 1.9% for fiscal year 2025, an indication that inflation pressures are here and that perhaps we might continue to see that pace of tightening accelerate. The Bank of Japan saying that they will continue to raise rates if their economic outlook is realized, not to mention that we did get one dissent, 8-1 vote was the outcome today. So we had the very dovish board member, Toyoaki Nakamura, needing to confirm the rise in firms' earning power across Japan, but it was still a very heavy rate decision to hike rates. So although we contend with the uncertainties that the Bank of Japan actually mentions in its statement for the economy and prices, and the real wages continue to remain significantly negative, and of course the potential of just Trump tariffs affecting the world. That is the uncertainty right now, but it seems that the pace and direction, at least the direction of travel is clear, is tightening. How fast the tightening will come is a question. I've spoken to economists earlier today talking about potentially the terminal rate being 1%, which could lead to 2 more rate hikes this year of around 25 basis points.
Crucial context. Sherian in Tokyo, our Asia trade anchor, we thank you. And we're going to continue this conversation next. We'll get the market outlook with Saxo's Charu Chanana as markets digest that Bank of Japan rate decision. And as she mentioned, weigh those Trump tariff comments as well. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, the Bank of Japan has raised its key policy rate the most in 18 years, with traders now awaiting Governor Kazuo Ueda's news conference for more hints about the pace of future rate hikes. In the meantime, we can bring in Charu Chanana, who is Chief Investment Strategist over at Saxo. Good to have you with me, Charu, this morning. Cherian was just saying that this is the most boring BOJ decision in history, but we'll try to get some excitement out of it. You had the yen weaker at first, now stronger. How hawkish do we need Governor Ueda to actually be at this press conference if those gains in the yen are going to be sustained?
Hi, Lizzie. Thank you for having me back on the show. I think the whole idea around keeping this Bank of Japan meeting has been very, very conscious, remembering, what happened last year, back in July, August, when we got this Bank of Japan rate hike. And at the same time, we got that U.S. jobs data really weakening and sending some shivers about the recession in the U.S., which obviously didn't materialize. But obviously that sent huge waves in the market. So this now the BOJ's stance has become that they really want to pre-communicate, and that's what we've seen. We've seen Ueda, we've seen Deputy Governor of the Bank of Japan as well coming out ahead of the meeting, kind of really signaling this rate hike quite well. But of course, we still did see quite some bit of volatility in the yen this morning. And, yen is really dependent on what the Bank of Japan does, but it also has huge dependencies on what's happening globally, particularly in the US economy, as well as those announcements announcements coming from President Trump. And this morning, before the Bank of Japan decision itself, we did see one such announcement, which was on, related to tariffs, which is, I think, really making the markets edgy at this point. So we saw the yen strengthening on the back of that announcement that President Trump is not likely to impose tariffs on China. And that is why we saw that, Bank of Japan reaction really, bringing in a little bit of a weakness. But when there was a realization that the hike is actually not a dovish hike, which the markets had really, prepared themselves for, we saw this yen strength really coming back.
Well, yeah, we saw the dollar slipping on Trump's speech last night in Davos remotely. In a bigger sense, I wonder how you think about when to fade long dollar, this trade, what the pivot's going to be to get out of that.
I would say since Trump's inauguration earlier this week, every time we've heard comments from Trump, actually, they've been pushing the dollar down. It's obviously not a significant move. There's this whole U.S. exceptionalism story that is also kind of really putting that support under the dollar right now. But to me, it does appear that President Trump obviously is very, very focused on America's growth, on making all policies, helping to support that growth in America. Not fueling inflation concerns. I think that's why we are seeing much more of a structured approach to tariffs. And he's very focused on this tactical strength of the dollar to really fade away to help the U.S. companies as well, especially those that are exporters, to kind of get the benefit of that. So I do think that the dollar pivot is somewhere around the corner. It will certainly get some volatility, especially as we go into the next week. We have the Fed meeting as well. So there's likely to be some volatility. It's not going to be a straight path down, but I think the risk reward for the dollar has started to tilt lower now rather than higher, despite that U.S. economic resilience still kind of holding up quite well.
OK, so maybe the pivot's begun. The other thing Trump said last night was he knows interest rates better than Jay Powell. I got a note from Ozan Tarman at Deutsche joking that he basically did an Erdogan on steroids on Powell. I wonder if you think Trump is going to undermine the Fed's inflation-fighting ability with comments like this.
That is certainly a risk, right? I mean, but it's not such a near-term risk. I would say it depends on how strongly Powell comes out as well in favor of a hold. That is obviously, again, the most likely scenario that is going to play out next week. How he guides the policy going forward into 2025. If he does take a very, very hawkish posture, I do think the markets will start to price in this risk of Fed independence being undermined much more strongly. But if he kind of balances out his tone, I would say, I think the markets are really not going to be bothered about that right now. I think the first focus of markets is really about getting that clarity on the tariff policy.
And just coming back to China then, if Beijing did manage to negotiate a trade deal with Washington and, Trump saying that it was she who called him on Friday, maybe that suggests that Beijing's willing to comply with his demands. I wonder if you agree with that. I wonder if you think there is going to be a chance of a yuan recovery in 2025.
There is no other choice the Chinese economy has at this point, right? Given the domestic headwinds that they're facing, right, from the consumer to the property. There are so many signs of a balance sheet recession in the Chinese economy. And the only engine that is supporting, that is holding up their growth right now is the export engine. Understandably, there was some sense of front loading of exports in that Q4 GDP number that we got out earlier. There is the exports is the real support that they need, because consumption, property, everything will take time to recover. And on the back of that, certainly they want to have the deal, that is possible with Trump. Now, but my sense here is that even though a negotiation may be in the works, I would think China still remains in the losing position here. Trump has the stronger hand. He's a hard negotiator. Okay. So I'm quite worried about this tactical rally that we're getting in Chinese assets right now and how long that can sustain as well.
OK, definitely one to watch. Charu Chanana, Head of FX Strategy at Saxo Markets, now Chief Investment Strategist. Good to have you with me. We're going to get back to Saudi next. Of course, the subject of Trump's exhortations last night. We'll hear from their side. The Saudi Kingdom Finance Minister coming on next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Verdon in Dubai. Now, as we heard earlier, President Trump has told the World Economic Forum that he's going to press Saudi Arabia for $1 trillion in investment, just a day after the kingdom pledged to plough $600 billion into the US economy. Earlier, the Saudi Finance Minister Mohammed Al-Jadaan told us that more about their view of relations with the US under Donald Trump.
A very strong U.S. economy is a good thing for the world and the world economy. The same applies to other major economies. If they go south, the whole world would really feel it. So
when the
we
U.S.
are excited.
Sneezes, the world gets a cold. Yeah.
Exactly. I mean, we are excited about the U.S. New administration, and we are excited about the U.S. economy. We think the next few years would actually show strength in the U.S. economy, and if that will be good for the whole world. Obviously, we need to be watchful. We need to make sure that we also support cooperation and multilateral institutions. But I am confident that the U.S. economy would be positive, and I think the IMF, in their latest report, showed that the U.S. is on the upside.
It seems like His Royal Highness the Crown Prince had a constructive call with President Trump yesterday. Lots of reports this morning saying that Saudi plans to invest up to $600 billion in the U.S. over the next 4 years. For people not familiar with those figures, that's about 55% of Saudi GDP. You're the finance minister. Where are you going to get that money from?
Saudi press agency actually issued a statement on this. We enjoy a very strong relationship with the U.S. over the years. I mean, we have a relationship that spans over 8 decades, very strategic, based on economy and trade, and will continue. I mean, currently we have over $770 billion of investments in the U.S. So this is not really new. This is a combination of investments and procurement. We have very ambitious plans in Saudi Arabia. The Saudi Vision 2030 is moving on plan, and our relationship, whether it is with the US, with Europe, with China, will continue to be flourishing as part of that reform.
So that was the Saudi Finance Minister Mohammed Al-Jadaan speaking to our very own Jumana Bersetchi in Davos. And we're going to continue our conversation about how the Middle East has played into the World Economic Forum this week over the course of the programme. But let's just check in on these markets. Oil, very much a feature of Trump's speech last night. And you're seeing weakness on both Brent and WTI this morning. A lot, though, for traders to factor in this week. Not just those Trump comments, but also US tariffs, sanctions and rising US stockpiles. So you're seeing there Brent at $78 a barrel. But coming up on the programme, Davos and wealth. We'll get the details on how attendees are flocking to Middle East leaders for investment. That's on next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Record hike. The yen strengthens against the dollar after the Bank of Japan hikes rates to 0.5%, the most in 18 years. Softer tone. Chinese shares rise and the offshore yuan extends gains after Donald Trump tells Fox News he'd rather not have to use tariffs on China. And Davos headliner. President Trump uses his much-anticipated address to the World Economic Forum to signal he'll ask for oil price cuts from OPEC Plus and greater investment from Saudi Arabia. Those are your headlines. It's just gone 8:30 a.m. across the Emirates. I'm Lizzie Verdon in Dubai in for Jumana Bersetchi. Well, what a week it has been. We started off with Donald Trump's inauguration and we end the week digesting in these markets Donald Trump's address to Davos remotely last night. You saw Wall Street stocks going to record highs, but futures pointing a touch lower this morning. Brent at $78 a barrel, so weakness there after Trump called for OPEC to cut prices. But he also called for rate cuts, and you saw that weighing on the 2-year yield yesterday. The 10-year showing more caution, and we're at 4.6% currently. And just finally, a bit of pain seen in the dollar as well off the back of those comments. But if we flip the board, we can look at the oil reaction. and put it into context, really, over the course of the week. So you've seen this drop over the past 6-7 days, and that really the longest losing streak since 2023, December. And we're going to pick up on that oil theme throughout the show, particularly because Donald Trump's comments were so directed at this region, Saudi Arabia. But we can next go over to Avril Hong in Asia. She's been digesting the market reaction to that Bank of Japan decision this morning. Yen moves in focus, Avril.
Oh, absolutely, Lizzie. Yen moves, but also look at what we're seeing across assets in Japan as they digest this decision from the BOJ. Now, the 25 basis point hike, that was as expected, to the highest level in about 18 years. But I think what kind of took markets by surprise was how sure they sound about sustainably seeing inflation above the BOJ's 2% target. They also raised the core inflation forecast for this year. So against that backdrop, maybe this wasn't the dovish hike that the investor community was expecting. And I think now it's up to Ueda to kind of put the icing on the cake in his presser. So stocks that initially maintained their gains, this slipped to negative. The yen is climbing. We're also seeing about 2-3 basis point moves in the yield on the 10-year. Lizzie.
OK, Avril, thank you. So not perhaps the dovish hike that we thought it was. But let's get back to Davos, the finance industry making a big push into the Middle East, and lots of bankers and investors at the World Economic Forum really trying to win business from governments and investors in this region. Despite the lower crude prices and tightened budgets, many attendees are still betting big on the Middle East, citing its growing client base and opportunities for expansion. Let's get more now with Bloomberg's Advaith, who joins us now. Good morning. I felt like this was such a bigger presence, a focus on the Middle East at Davos this year. Is that just me, or is it significantly bigger than previous years?
Morning, Lizzie. Yes, it does seem significantly bigger. If you look at the size of the UAE delegation alone, we're talking about 100 executives from the private sector, from government, names like Khaldun Mubarak, who's the CEO of the $330 billion Abu Dhabi Sovereign Wealth Fund, Mubadala. If you look at then also the Qatari events, right, the QIA had a party on Tuesday that attracted the likes of Blackstone's chief shortsman. David Beckham, of course, was there posing for selfies. And of course, Saudi Arabia had a massive presence as well, including the investment minister, as well as the deputy CEO of the $1.5 trillion development NEOM. So, yeah, significantly larger presence this time around.
Yeah, I saw Tony Blair hanging out at Saudi House as well for half an hour. I mean, what's in it for these foreign firms, and what do the Gulf countries want out of this week?
So for the Gulf countries, it's, of course, an opportunity to really showcase their transformation into global hubs. If you look at Abu Dhabi, Dubai, Riyadh, these are all cities that have drawn some of the world's biggest firms. It's an opportunity to showcase their soft power push, the events that they're going to host, including the World Cup in Saudi Arabia. For the foreign executives, perhaps the Middle East represents one of the most lucrative markets there is out there. We're talking trillions of dollars. The top 5 sovereign wealth funds control about $5 trillion in assets. So that represents a massive opportunity. And of course, there is a massive transformation program underway in some parts of the region, Saudi Arabia, with Vision 2030, and they do need significant infrastructure investment. So it's an opportunity on both sides, but for foreign executives, this is a very lucrative market.
OK, thank you so much for that. I feel like this week at Davos has been the perfect advert for our Mideast Money newsletter, really the focus of global leaders. Thank you, Advaith Nair, there for that update. Now, we can hear the other side of the equation, the UAE seeing global trade growing this year, despite US President Donald Trump threatening to impose major tariffs on imports. Thani bin Ahmed Al-Zeyoudi, the UAE Foreign Trade Minister, of course, spoke to us, our very own Jemana Basechi, at the World Economic Forum in Davos.
At the end of the day, Trump is a businessman, and he wants to ensure that there is deals is going to be done throughout the year. The momentum in the foreign trade and global trade is growing, and I'm very optimistic that this year is going to continue the growth, especially with some of the geopolitics that starts cooling down is going to have a huge impact on the demand coming from different regions. So we're very optimistic, and even looking at what we have achieved in the UAE in the last 3 years with the whole different geopolitics going around the world, we're still continuing the growth. Last year we had almost above 14% growth in our non-oil foreign trade, which is almost 4 times the global average. So I'm very optimistic that we're
You're
going
not
to have
expecting
a good one.
trade disruptions then this year?
Disruption was there in the last 4 years, and we're seeing that the business is maneuvering and adopting itself. The resilience is very critical, and I think most of the world learn how to be more resilient after COVID and after the geopolitics and the conflicts that happen.
Yeah, well, you mentioned geopolitics. The news has been positive so far to this year with the ceasefire. How do you think that is going to affect business sentiment, if at all?
It's going to encourage more businesses when it comes to attraction of investments, movements of commodities, and attraction of business people and talents to the region and to those areas as well. The most important thing is going to be the infrastructure developments, which is going to be critical because that's going to as well be connected to the growth that we want to see in those regions.
Yeah. So far, you've signed 3 CEPAs at the start of the year, so it's been quite busy. Give us the outlook for what you're planning on doing. What's the pipeline for CEPAs? Yeah,
we concluded 24 agreements until the end of 2024. We started the year with 3 signings of them, but we concluded with Azerbaijan. And we're going to continue finalizing some of the agreements and starting new ones. We're very optimistic that we're going to conclude with Mercosur, with Nigeria, with Thailand, with Philippines soon. And we're going to kick off the negotiation with EU, with Mexico, and some other African as well as South American nations.
Are you seeing a tangible economic impact on the UAE economy on the back of the CEPAs that you signed?
Absolutely. The impact is massive. The contribution of those nations into our foreign trade is there, but we're seeing a good attraction of companies from those nations, attraction of other nations, companies to the UAE, investments attraction to the country, productivity is increasing, as well as attraction of talent to the UAE. So yes, a huge impact. We know for sure this is going to have at least around 3.8, 3.7% impact, direct impact on our GDP by 2030.
Another great conversation out of Davos. That was Thani bin Ahmed Al-Zeyoudi, of course, the UAE Foreign Trade Minister, speaking to our very own Jemana Besechi. Now, for a look at some of the other top stories that we're following for you this morning, Turkey has cut interest rates for a second straight month and signalled similar reductions at future meetings by tweaking its guidance. The central bank lowered its one-week repo rate from 47.5% to 45%. Most analysts expect Turkey will ease policy at the same speed at all 7 of the remaining MPC meetings later in the year. Elsewhere, Boeing has reported fourth-quarter revenue that missed estimates after last year's bruising strike that idled most of its aircraft production. Preliminary results show sales were $15.2 billion, less than the $16.8 billion expected. Boeing took a hit, of course, over $1 billion as charges tied to the strike also updated on the impact from troubled defence programmes. In other news, JP Morgan boosted CEO Jamie Dimon's pay last year to $39 million as the lender posted a record-breaking annual profit. Dimon's pay jumped about 8% from the $36 million he earned in 2023. Dimon has run the bank for almost 2 decades, and questions are growing over who might succeed him. And bankrupt Purdue Pharma and its owners have agreed to pay $7.4 billion to a group of US states and other parties to settle a long-running litigation over OxyContin's role in the deadly opioid epidemic. The deal comes after the Supreme Court last year rejected a $6 billion pact that would have protected Purdue's owners, members of the billionaire Sackler family, from any further litigation into the addiction crisis. Elsewhere, Reliance Group is building what may become the world's biggest data centre in India, the latest in a blitz of global investments to capitalise on booming demand for artificial intelligence. The company, led by Mukesh Ambani, is buying NVIDIA chips for the operation in Gujarat. Bloomberg understands it's expected to have a total capacity of 3 gigawatts, making it far bigger than any data centre currently operating. Well, those are some of your top stories this morning. Coming up right here on Horizons, Nigeria's oil recovery is creating a bit of a quandary for the government of Africa's biggest crude producer. We'll get more on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai, where it's just gone 8:43 a.m. To Africa now. Nigeria has emerged from a years-long oil output slump due to improved security, and that is creating a quandary for the government of Africa's biggest crude producer. Stretched public finances badly need the extra revenue that would come from these higher oil exports, but the country is also under pressure to adhere to OPEC Plus production limits. Let's get more now on how Nigeria will balance all of this with Bloomberg's Anthony De Paula. Anthony, just talk us through how we got here, how Nigeria actually managed to boost this output.
Yeah, Nigeria is one of those interesting cases for OPEC because it's one of those countries that has been more a chronic underproducer than an overproducer because of a lot of those issues around stealing oil from pipelines, pipeline leakages, maintenance, a state company that's producing there. So we've been watching Nigeria for a couple of years now as they have that a target of about 1.6 million barrels.
Emphasis on target.
Yeah, target, exactly, that they've been trying to get there and just haven't gotten there. So really, kind of that OPEC limit has been a moot point because they haven't been able to produce there. Now, as you say, they are making improvements in the country. There are new, smaller domestic companies that are coming in and producing. Of course, when you've got a small company in there with some smaller acreage, they are going to want to produce as much as possible and get those efficiencies. They are working on some of the theft from the oil pipelines. And there's also an improved security situation in Nigeria. So all that is factoring into helping improve that situation. So they are getting closer to that 1.5 million barrel a day limit, but we're not quite there yet.
So given that potential, that target, and putting aside the OPEC Plus production limits, it seems very convenient that Donald Trump's asking for lower oil prices if you're Nigeria.
Yeah, exactly. Well, lower oil prices means that he wants OPEC to open up the taps and put more oil on the market. He made that call specifically to the Saudis yesterday in his address at the World Economic Forum. So that is interesting. I mean, that would allow for, if that happens, more oil to come on from members like Nigeria, like Iraq, which is always brushing up or exceeding its quota, countries like the UAE. And, of course, the Saudis would like to have more oil on the market, but they want to keep that price high. So it's interesting, this call from Trump, we've heard it before in Trump 1.0. Now we're into Trump 2.0. So a lot of the same things, but a little bit different. So if you noticed yesterday, Trump gave them a little bit of a guilt trip, saying that these high oil prices are helping support Russia in the war on Ukraine and that they are responsible for some of those deaths there. As a carrot, he says, look, if you increase oil prices, that's going to bring down the cost of living, and we're going to be able to reduce interest rates, and that's going to help you on your borrowing costs. So it's a little bit more of a pointed message than we heard in the last administration. He's a little bit, you could say, a little bit of a threat, but a little bit of an offer as well.
Okay. Trump looking for a deal on oil too. Bloomberg's Anthony De Paula, we thank you. After a pretty dismal week when it comes to oil. But staying with Nigeria, the country's finance minister says that the government reforms have stabilised the nation's economy and set the stage for the return of foreign direct investment. He spoke to us in Davos.
Under the President Bola Ahmed Tinubu, Nigeria has stabilized the economy. It has taken back 5% of GDP that was being wastefully lost to the federal government and the fiscal authorities. And the long and the short of it is that some major steps that have been taken to achieve market pricing of petroleum products, market pricing of foreign exchange, thereby eliminating what were very wasteful subsidies, has set the stage for the return of foreign direct investors. The early signs are very, very positive. Already, Shell has announced a $5 billion final investment decision. Total Energies has announced a $3 billion total investment decision, final investment decision. And in the non-oil sector, we have, as part of our conversations this week, we have had investments, indications, and I won't say announcements, but definitely firm indications from financial payments, international financial payments companies, from companies that want to do public-private partnerships in the infrastructure area, as well as fast-moving consumer goods companies that are already in Nigeria that are investing even more.
So that was the Nigerian Finance Minister, Wale Edun. In other news out of Africa, Africa Centres for Disease Control and Prevention has said that nations need to quickly find ways to raise local health funds as programmes including the US President's emergency plan for AIDS relief may be reduced. The call comes after President Trump decided to exit the World Health Organization, a move that could see funding cuts to health security programmes. At least 9 African countries have AIDS programmes that risk being affected. Elsewhere, Gabon's sovereign dollar bonds rallied after the nation's junta said it'll hold presidential elections on April the 12th, raising the prospect of a return to civilian rule. The transition will come almost 2 years after Gabon's military leaders overthrew President Ali Bongo. And mines in South Africa registered the lowest number of deaths on record last year. Operations reported 42 fatalities in 2024, down from 55 a year earlier. South Africa's mines, which employ nearly 500,000 people, are among the world's deepest and most expensive to run. South Sudan has directed internet service providers to block all social media platforms following violent protests over the mistreatment of citizens in neighbouring Sudan. South Sudanese refugees were violently attacked earlier this month, with videos shared on social media sparking retaliatory attacks. The National Communication Authority says the blocking order will be in place for a maximum of 90 days. Well, those are some of our headlines this morning. Coming up on Horizons, though, Iraq's president shares what he hopes to see from the Trump administration for the Middle East. We'll bring you more from our interview with Abdul Latif Rashid next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. To one of our top interviews now, the Iraqi president says that the problems in the Middle East will remain until the Palestinian people are given their right of self-determination. Speaking to us in Davos, Abdul Latif Rashid also discussed his hopes for President Trump's second term.
There are a lot of issues on his agenda, and I think the best thing is to wait and see what will happen in the near future, obviously after the 100 days for completing the administration. But I hope, again, I repeat that I hope, and I think it's everybody hoping that this administration will try to solve most of the national and international problems in the world.
Maybe then President Trump will eventually get the Nobel Peace Prize that he wants.
Well, if he does that, I wish him all the luck. He should get it.
You talk about a period potentially of stability and peace. We're coming off an extremely tumultuous period in the region. Yet in the last month, we have a ceasefire agreed to between Israel and Hamas. We have a ceasefire agreed to between Israel and Hezbollah. We have the demise of the Assad regime, new leadership in place. How do you see the regional stability evolving in the coming months and years?
Middle East has been going through a very serious period of instability, conflicts in many places. Obviously, on top of it, Gaza problem, Palestinian problem, Palestinian demands, and fighting in Gaza or attacking Gaza on daily basis for a year and a half, then jumped to Lebanon, and then we have the issue of Syria. I think everybody has welcomed the ceasefire in Gaza, but it's only first step. Obviously, ceasefire is very important. Without peace, you cannot tackle any problem. But We hope that it will be starting point for solving genuinely the Palestinian problem. We in Iraq, and I'm sure many other places, we think without giving the Palestinian people their right of self-determination, the problem will remain on the table all the time. So this is one of the things which we are considering, and we are waiting that the international community will play a big role in achieving permanent peace in Palestine, in Gaza, and the rest of land which is occupied by Palestinian people, for achieving self-determination for their future. I think enough casualties has been committed, enough destructions have been committed, and I think the time has come. And it is the responsibility of international community to encourage a peaceful, permanent solution for Palestinian problem.
Do you think the Trump administration has the willingness to allow for that to happen?
I hope so.
So that was the Iraqi president speaking to our very own Jumana Basetchi, our Horizons anchor, of course, who has been on the ground in Davos all week. We'll be speaking to her later in the programme, but just checking in on these markets as we approach 9 a.m. here in Dubai. You are looking at futures pointing a touch lower stateside, but a touch higher in Europe, up 0.4% on Euro Stoxx 50 futures. If we just take a look at the Treasuries picture, you've got the 10-year down 2 basis points at 4.62%, the 2-year lower 3 basis points at 4.25% as we digest those comments from Donald Trump demanding lower rate cuts from the Fed, of course. But coming up on the next hour of Horizons Middle East and Africa, we're going to be joined by Jennifer Zabasaja in Johannesburg and plenty of great guests. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Record hike. The yen strengthens against the dollar after the Bank of Japan hikes rates to 0.5%, the most in 18 years. Softer tone. Chinese shares rise and the offshore yuan extends gains after Donald Trump tells Fox News he'd rather not have to use tariffs on China. And Davos headliner. President Trump uses his much-anticipated address to the World Economic Forum to signal he'll ask for oil price cuts from OPEC+, as well as greater investment from Saudi Arabia. Those are your headlines. A very good morning. It's just gone 9 a.m. across the Emirates. I'm Lizzie Verdon in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Lizzie, it's only been a few days of the Trump administration, but a lot of whipsawing for markets already just 4 days in.
Yeah, I need a weekend, Jen. What a lot to digest. Markets have had so much to process, not least that speech from Donald Trump last night remotely into Davos. And we did see Wall Street hitting a record high when it came to equities. Futures pointing a touch lower now. But we have Brent knocked as well because, of course, he called for lower oil prices from OPEC+. He also said he'd push for rate cuts from the Fed. That helped push the 2-year Treasury yield down, but a bit more caution reflected when it came to the 10-year yield, that now at 4.6%. And there we have the Bloomberg Dollar Spot Index weaker 0.4%, so feeling the pain as that processes the Trump effect as well. Let's just zoom out, though, on the oil moves. If we look at WTI over the past week or so, you've seen its longest losing streak since December 2023. And we're going to pick up on that oil theme throughout the show because, of course, Saudi Arabia really was the target of Trump's call for cheaper oil prices. So there are the oil moves over the past 7 days, the longest losing streak since December 2023. But let's focus in on Asia markets now. Avril Hong's over in Singapore for us, where you've been looking at the yen moves, Avril, and it can't seem to make up its mind on this BOJ decision. A change of heart over the past couple of hours.
Yeah, we saw after the decision, the yen was fluctuating, but I think it's since made up its mind. The yen bull's getting recharged. The read-through from the hike, but also that raise in the inflation forecast, I think, is that this is not quite the dovish hike that the investor community was expecting. Of course, the focus now shifts to Ueda's presser. The yen is climbing, but also wanted to highlight what we're seeing in Chinese assets following Trump saying he would rather not use tariffs on China. And this is really capping off a week where he's kind of taken a less aggressive tone on the Asian giant. So this is helping the offshore currency to its highest level against the greenback since November. As you know, it has been underperforming, really under pressure since the US election. Chinese stocks, back from the lunch break, extending gains initially, now slipping a little, erasing some of that, but still about 1.8% higher on the Hang Seng. Really tells you how sensitive these Chinese assets are to Trump. Guys.
OK, Avril Hong in Singapore, we thank you. Well, Donald Trump has told business and political leaders over in Davos that he's going to ask Saudi Arabia and the other OPEC nations to bring down the cost of oil. The US president says higher crude output would heighten pressure on Russia to end the war in Ukraine. And he also said that he's planning to ask the Saudi Crown Prince to invest even more in the United States.
It's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them.
Well, joining us now is Dana Kraish, Bloomberg's UAE bureau chief. Dana, is just $1 trillion Trump wants out of MBS. He also wants cheaper oil. Is he likely to get it?
It's good to remember that that's not the first time the U.S. has asked for it. Biden was in Riyadh and meeting with Crown Prince Mohammed bin Salman, also known as MBS, and asked for lower oil prices. That didn't happen. But the Saudis like Trump. They have a better relationship. And I think in the past few days, we've seen them want to display that they do have a good relationship. We saw that Saudi Arabia pledging $600 billion over 4 years in the U.S. in investment in the first phone call between the two. But lower oil prices makes it more difficult for Saudi Arabia to raise $600 billion or even the $1 trillion that Trump wants them to actually finance U.S. investments. They need higher oil prices to fund the Vision 2030, transforming the economy away from oil. Now, it's also good to remember the relationship between Russia and Saudi Arabia. And we saw Trump yesterday saying that if we lower oil prices, we could end the war in Ukraine, and it would help lower interest rates as well. So one, how much is Saudi Arabia willing to forsake this relationship they've had with Russia, especially in OPEC+? They both needed higher oil prices, and they haven't been able to unwind the production cuts in the past 2 years. One, Russia funding the war, and secondly, Saudi Arabia is funding its Vision 2030.
Yeah, so Trump drawing that link between the oil price and Russia and the war in Ukraine. But what about the other war in this region and the Saudi relationship with Israel? You know, this starring role that the Middle East and Saudi Arabia seems to have played in Trump's speech last night. Does it tell us anything about what that relationship will look like in the future?
It tells us a lot because Saudi Arabia, just like the U.S., they want a lot from Trump. First of all, not just that Trump wants this normalization deal, and it seems like his foreign policy in the Middle East is resting on integrating Israel better in the region, and that's with a normalization deal with Saudi Arabia. But Saudi Arabia wants security guarantees, defense guarantees that they've been asking ever since 2020 when these Houthi drones struck Aramco and they didn't feel that the U.S. did anything in return. They want defense treaties. They want security guarantees. So Trump also has to give Saudi Arabia something. Now, investing in the U.S. is not so bad. They'll bring lots of high return. But also lowering interest rates could be good for Saudi Arabia with, not as high as they want oil prices to be now. They are borrowing a lot. We've seen yesterday or a few days ago, PIF, the Sovereign Wealth Fund, raising $4 billion. The Saudi government, $12 billion. Before that, $7 billion in private loans for the PIF. They're raising money, so lower interest rates could be good for them, too. So I think it remains to be seen how Saudi Arabia will navigate this relationship, especially between Russia and Trump.
But it's definitely a two-way street, more than a two-way street. The traffic going everywhere in geopolitics at the moment, not least as well between the US and China. So it definitely seems like we've had a change of tone over the past week. Interesting that Trump was saying that it was she who called him on Friday night. Do you think that signals that actually Beijing might be willing to come to the table and comply with Trump's demands?
There are positive signals, I would say, with Trump only wanting the 10% tariff, and that's far cry from the 60% tariff he was vowing to impose on China during the campaign trail. And secondly, we've seen him talking about wanting better relationship with China and saying, we want a fair relationship, not how it is now. We want to level the playing field. And we also saw China dispatching a senior official to the inauguration, to the swearing-in ceremony, and that's the first of its kind. So both of them are signaling better relationship, but I think China probably is weary and is cautious about that. We've seen Trump and the trade war that happened during his term and the whole China initiative that also restricted Chinese students from coming to studying in the U.S. And of course, better relationship is better for Americans too, because a trade war would mean higher prices for Americans and, of course, harming those companies that import from China.
Yeah, we'll have to see how those signals translate into actual policy. Dana Craig, Bloomberg's UAE Bureau Chief, good to have you with me, as always.
Yeah, and we're going to stick on that theme. The U.S. president has expressed a reluctance to impose tariffs on China. In an interview with Fox News, President Trump suggests that a trade war between the world's largest economies could be avoided.
We have one very big power over China, and that's tariffs. And they don't want them, and I'd rather not have to use it. But it's a tremendous power over China.
Bloomberg Asia senior editor Bill Ferries is joining us now for more. So, Bill, in the same breath, we're hearing President Trump saying that this is a power that the U.S. has over China, but still he doesn't want to use this power in particular. How much can we read into these latest statements?
Yeah, I think our insight is pretty limited here in terms of whether Trump is expressing some kind of longer-term strategic approach towards China, or if he's just trying to maybe have something hanging over Beijing's head until he gets his full economic team in place. He had long talked about having at least 10% up to 60% tariffs on China. We know from our reporting just before he took office that his advisors were looking at how tariffs could come in, whether they might come in a phased approach as opposed to just dropping them all at once. So it's hard to know. Is this a policy shift by the president, or is he just waiting for Scott Bessent, his Treasury Secretary, to be put in place and his key economic aides to come up with a plan to go forward? I don't think we know. It's really Friday marks really day 4 of the Trump presidency, so I think it's too early for policymakers in Beijing or the markets to breathe a sigh of relief here.
Well, Bill, you mentioned the markets. I mean, not too early for some of the volatile reaction that we're seeing to a lot of these statements. Is this perhaps an overreaction? You mentioned we're only on day 4, but still, markets at least trying to get ahead of whatever's to come.
Yeah, I mean, it's certainly like when you look at what's happened so far this week and you look at some of the campaign rhetoric, particularly last year, what we've seen this week is certainly not a worst-case scenario by anyone's standards. So he's had this, President Trump has had this call with President Xi Jinping. He said it went well. We haven't seen a wall of tariffs go up so far. So on all those counts, I think it's better than what the markets may have been bracing for. That said, is it going to be smooth sailing in U.S.-China relations for the next several weeks, and the next several months, the next 4 years, just because of what we've seen this week? I don't think anyone would say that's the case either.
Bill, weeks, months, years. I'm glad you put that out for us there. Bloomberg Asia senior editor Bill Ferries joining us and giving us some great insights. Thanks so much, Bill. Now, still ahead, we'll get the market outlook with Amundi Investment Institute as markets digest the BOJ's rate decision while weighing President Trump's latest tariff comments. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Verdon in Dubai. Now, the Bank of Japan has raised its key policy rate the most in 18 years. Much expected, though, but traders now awaiting Governor Ueda's news conference for more hints about the pace of future hikes. Let's discuss with Guy Stear, Head of Developed Market Strategy over at Amundi. Guy, we saw initially the yen down. Now we're seeing the yen up. Is this a hawkish hike from the BOJ?
Well, I think that it's not going to be the only one this year. I mean, I think there's going to be at least one more. It's very clear, and it has been since the middle of last year, that Japan is a lot more comfortable with the state of economic growth and concerned about inflation. So we think that it's going to continue. So the trend will definitely continue in terms of higher Japanese rates.
We were joking that this is the most boring BOJ meeting in history, but do you think that Governor Ueda needs to give us a little more hawkishness if the yen's gains are to be sustained?
Possibly. I mean, I think the Bank of Japan has been sort of very hot and cold in terms of, and very, very excellent central bankers, in that they're kind of don't drop hints about what's going to happen next. But I think that they're going to continue to emphasize the need to control inflation, and that so the market will probably be convinced that the pace of rate hikes is still going to be going up. The thing is, though, that dollar yen is probably more a function of what's going on in the US than it is in Japan, really. So the question is, if people think Trump is going to be aggressive on tariffs, if people think that inflation is going to be high in the US, if people think that the Fed is going to be tough, then probably the dollar is going to stay strong against the yen.
Well, you raise all the questions I wanted to ask you. So what's your outlook for the Fed? Do you think there is a chance the next move could be a hike?
Well, probably not, actually. I mean, we think that the Fed will do nothing for probably another 4 or 5 months.
And then?
And then probably as we get into the second quarter and the third quarter, they'll cut. And we think they'll actually cut 3 times over the course of this year to get down to 375. The reason is because the U.S. economy was slowing already at the end of 2024. There's a question as to whether Donald Trump's policies will be an inflection point for U.S. economic growth. But the probability is that they really won't. So the U.S. economy will continue to slow towards 2%. Inflation will continue to come down, and that'll allow the central bank to ease. But they're going to be slow about doing it because the world is a very uncertain place.
But why is that? Why are you so negative about the impact of his policies on growth? Is it because of tariffs? We've had all these announcements on AI.
Yeah.
You know, why aren't you more optimistic?
Well, if you think about it, so the U.S. economy, about 3/5 of economic growth is the consumer. And the consumer has been coming off of 4 very, very strong years because of COVID savings, because of real wage growth, because of higher debt levels. And basically, all of those anchors are finished. So the only way the U.S. consumer could really continue to spend more would be if you had a significant drop in terms of oil prices, and therefore you had more spending power for the consumer. But even if oil prices do come down, we're talking about tariffs going up, and that would mean that costs go up, and that would mean that there's a little bit of stickiness, and so probably you're going to see the consumer decline. The greatest question about U.S. economic growth, and it's not just for 25, but it's for the years to come.
All 4 of them.
Well, yes, and even beyond, maybe, is whether you're going to see an acceleration in investment in the U.S. So you see U.S. companies investing more, whether you see companies outside the U.S. investing more, and probably they will. I mean, this is the great stock opportunity in the U.S. and the growth opportunity, but it's going to happen slowly. And so therefore, we think that the Fed will be able to ease a little bit more by the middle of 2025.
Just on the tariff point, we've been debating whether these kind of signals about warmth between Xi and Trump are actually going to translate into policy. How do you read what we've heard this week?
It's very difficult to tell. I mean, I think that the warmth will probably... I think Donald Trump will keep asking for things, and if he gets them, then he'll roll back on tariffs. But honestly, in terms of Donald Trump's tariff policy... anybody's guess is, and it almost depends on the day of the week, because we were told that the focus of tariffs was going to be China 6 weeks, 2 months ago. Suddenly it's turned to Canada, Mexico, so sort of nearer partners. The percentages change on an almost daily basis, so it's very difficult to tell.
Well, just on China domestically, of course it factors in the tariff story. There's also the stimulus story. When does China become investable to you?
Well, China is cheap. So in some sense, Chinese equities are an interesting buy right now as a long-term investment. But the real question, as you ask, is what's the catalyst? And probably Chinese economic growth doesn't start to pick up again until house prices have clearly bottomed. House prices on a month-on-month basis are still going down. So the bottoming of house prices, in our view, won't take place until the end of the second quarter, beginning of the third quarter this year. And at that point, you'll see a recovery in retail sales, you'll see a recovery in domestic demand, and then you'll really see a recovery in Chinese stocks.
Okay. We shall wait with bated breath. Guy Stear, head of developed market strategy, I should say, over at the Amundi Investment Institute. Lovely to have you with me here in Dubai. Well, coming up on the programme, Nigeria's oil recovery is creating a quandary for the government of Africa's biggest crude producer. We'll bring you more on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Nigeria has emerged from a years-long output slump, and that's creating a quandary for the government of Africa's biggest crude producer. Stretched public finances badly need the extra revenue that would come from higher oil exports, but the country is also under pressure to adhere to OPEC plus production limits. Let's get more with Bloomberg's Ndiro Oganga, who is following this story from Kigali. So, Ndiro, talk to us about some of the factors behind this improved production from Nigeria. We've been talking about this for quite some time and the goals that the country has actually had.
Hi, Jen. So security is the main factor towards this increase in production. And to contextualize this, let me take you back to 2022. This was a time where production had dropped to 1.1 million barrels a day, and it was being attributed to theft and vandalism. It was a time where oil majors were selling their assets because they could not deal with the losses that was coming from the vandalism that they were experiencing. If you just look at a pipeline like the Trans-Niger pipeline that is able to transport up to 180,000 barrels a day, it had been tapped in 150 different places. And this just means that producers were getting a very small fraction of what they were pumping through these pipelines every single day. So the government has put in place different measures to buffer security in oil-producing regions. And also you have the Nigerian National Petroleum Company saying that they've set up command centers where they can track and monitor the operations of different players in real time. But outside of security, there are also other factors that have contributed to this increase in production. For example, local players. They have bought a lot of assets from major oil companies that have left the country, and drilling in the past 4 years has nearly tripled. If you look at Seplat Energy, they say they will double their production to 120,000 barrels a day in the next 6 months after they acquired Exxon Energy. And you have Oando PLC that are looking to increase their production to 100,000 barrels a day from 40,000 barrels a day over the next couple of years after they also acquired some major assets from international players.
Yeah, we were speaking to Oando just a few months ago about this specific thing. Ndiro, when we talk about the impact of some of these increases in production, what do we know about how this could potentially affect the local market there, but then also the global market? Because that folds into the broader story about oil that we've been speaking about.
Jen, for Nigeria, this is largely good news, and it's welcome news because more production means they can make more revenue from their exports. And this just means that they will have enough supply of FX. They can buffer their currency. They can also buffer their reserves. But also they can be able to finance their budget. A huge chunk of their budget comes from oil revenues. And so they're able to fund that comfortably without having a really large deficit. Also, you have the government that is targeting 1.5 million barrels and then eventually raising it to 2 million barrels, but then they have to contend with OPEC quotas. Their OPEC quota is 1.5 million. And if you look at Nigeria, just the reasons that I stated, the incentive to produce more is there, particularly if you look at their current financial situation and the economic challenges that they're having to contend with. So they have to have a conversation with OPEC. We've seen Angola have that conversation. It wasn't successful. They chose to leave the cartel. But barely 6 months later, UAE was allowed to produce more. So that could be a window of opportunity for them. But if you look at the global market, Donald Trump is coming into power. His policy, drill, baby, drill. So there are likely to be a surplus of oil in the market. And this is not good news for a country like Nigeria because prices could be affected, and that will affect the inflows that come into the country.
Yeah. Right. I don't know if it's the optimal time or not the best time for Nigeria. We'll have to see. Bloomberg's Ndiro Ganga. Ndiro, thanks so much for following that story for us. Now, here's a few other stories we're following. Africa's Centers for Disease Control and Prevention says nations need to quickly find ways to raise local health funding as programs, including the U.S. President's emergency plan for AIDS relief, may be reduced. The call comes after President Trump decided to exit the World Health Organization, a move that could see funding cuts to health security programs. At least 9 African countries have AIDS programs that risk being affected. And for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and also on our website, and also our podcast available on Apple, Spotify, and wherever you usually get your podcasts. Now, let's take a quick check at where markets are positioned right now. We have plenty more ahead, but as we can see, a bit of downside, at least for U.S. equities. In Europe, though, Eurostock 50 futures looking like they're tilting to the upside, but of course a lot to digest with Trump's comments. Plenty more ahead. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Record hike. The yen strengthens against the dollar after the Bank of Japan hikes rates to 0.5%, the most in 18 years. Softer tone. Chinese shares rise and the offshore yuan extends gains after Donald Trump tells Fox News he'd rather not have to use tariffs on China. And Davos headliner, President Trump uses his much-anticipated address to the World Economic Forum to signal he'll ask for oil price cuts from OPEC Plus and greater investment from Saudi Arabia. It has just gone at 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Lizzie Burden in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. Jen, what a week it's been for us, with Donald Trump's inauguration at the start of the week, his speech at Davos last night, just so much for markets to get their minds around this week.
Yeah, absolutely. And as Bill Ferries was just saying, we're days, weeks, months, and years into what is likely to be a very busy time for markets. But let's just take a look at where markets are positioned today, because it is Friday and it has been quite a week, as you were just mentioning there, Lizzie. If we take a look at U.S. equity futures, tilting marginally down right now, not doing too much. But on Thursday, we did see the S&P climbing to a fresh high. And again, it's a lot of the markets interpreting what it is that Donald Trump is saying, and potentially optimism growing around some of the commentary that he is making. If we take a look at the 10-year yield, slipping right now, it's trading near 4.63%, but still a bit of caution in the markets about really what it is that is to come from this new administration. That's sort of playing out, as we can see in the dollar. The dollar is trading down just about 0.3%, retreating this morning. And that also takes me to the emerging market index, because emerging market currencies and stocks have been just at least trying to sift through what we've been seeing from the Trump administration. Right now, the MSCI EM index pointing up just about 0.7%. But on Thursday, we actually saw the 7-day rally for EM market stocks and currencies actually faltering, just as there was a bit of concern, or at least deciphering, to be done about Trump's comments about interest rates and, of course, tariffs. But potentially we'll see the index closing in the green this week. And of course, we've been talking about this all morning. The story of the week has been oil. And of course, part of that is coming from Trump's comments, which brings me to this terminal chart. What we're seeing, WTI is on pace for its longest down streak since December of 2023. Brent is trading down, but a lot of the focus for oil markets is what exactly does this look like going forward? We've had some news this week about stockpiles. And then, of course, we're hearing from President Trump about more oil. And so potentially what does that look like going forward is a lot to digest for the markets. But let's turn over to Asia and check in on what Asian currencies are doing. Avril Hong, of course, is standing by in our Singapore studio. Avril, what are you watching?
Well, Jen, let's just say it's been quite a week for FX traders. They were sort of bracing for the worst But, I think some would say that not their worst fears have materialized as far as Trump is concerned, specifically when it comes to relations with China and on the tariff front. Most recently this morning, right, getting that comment in a previously recorded Fox interview that he would rather not use tariffs on China. And this is capping off a week where at the start we heard about that, a very good phone call with his Chinese counterpart. So that's kind of easing pressure on Asia FX, given the dollar that's moved lower. Even the Indian rupee is headed for its best week in 4 months. The offshore yuan has been in focus. Now dollar China below the 7.25 level. This is the strongest we've seen the renminbi since November, highlighting as well what we're seeing in the Japanese currency that got an added boost today from the BOJ after it hiked rates and then raised the inflation outlook. Of course, now the focus shifts to Ueda's presser. Jen.
Avril Hong in Singapore for us. Avril, thanks as always. Let's turn back to the region here. South African inflation quickened at a slower pace than expected in December. The data providing room for policymakers to cut interest rates later this month. Joining us now is Elna Moolman, Group Head of South Africa Macroeconomic Research at Standard Bank. Elna, great to get you on this morning. Before we talk about South Africa and the rand, the broader story here with U.S. and China folds into what is happening in EM. How do you see the current back and forth between China and the U.S. Playing into whatever sort of growth story that we do ultimately get in emerging markets?
I think the problem for South Africa is, of course, that this creates a lot of uncertainty, and we already saw at the beginning of the year the pressure generally on financial markets, and then, of course, specifically on the rand exchange rate. And we'll talk about inflation in a moment, but that is one of the key risks. And so you already have that impact, and that has a consequence for the Reserve Bank and how much or how easily it can provide further support. And, of course, all of this uncertainty is not great from a growth perspective. I mean, we already have some domestic uncertainty, and we can talk about the reforms and how sure we are about that continuing in the political backdrop domestically. But all of this global uncertainty just adds to firms becoming a little bit more cautious and just holding back perhaps on some of the fixed investments which we so desperately need to get growth higher.
What does that mean, Elna, for the South African Reserve Bank next week? And also we'll get the Federal Reserve as well.
Yes, so we think that, well, firstly, you've referred to the low inflation print, and we think that to some extent that gives the Reserve Bank comfort that inflation domestically is still under control. And yes, you may have some concern around how much the current currency weakness may ultimately boost the inflation forecasts, but you're starting off such a low base. You have the confirmation that underlying inflation pressure is very weak. The consumer is still reasonably weak. And so even though the SARB will be concerned about these inflation pressures, I think it's counteracted by all of this underlying inflation weakness. And so bottom line is we still think there is a bit of scope for the SARB to cut rates. It's difficult to know exactly what the timing could be. We think they could cut further at this upcoming meeting, again 25 basis points, and then we think there's scope for another 25 at some point, possibly at the subsequent meeting.
Elna, and yet you and your team do believe that a rand recovery is likely to take shape. We were just taking a look at the rand right now, trading down right now. When do you see that taking shape, and what's the catalyst then?
I think the starting point is one of a rand that was extremely cautious towards the end of last year and beginning of this year, partly with an eye on the global developments that you've referred to. So US policies, what will we ultimately see, etc. And we've already, of course, seen a little bit of a recovery. I think, firstly, it's important that the domestic fundamentals are quite solid. We've seen the political developments. We're seeing ongoing progress with policy reforms. We're quite constructive about the growth outlook. And so at least that gives you a solid starting point. So on top of that, we had some uncertainty, we had some rand weakness, but I think the rand recovered because these fundamentals are quite solid. And if we look at the growth forecast for the year ahead, then in terms of the comparison for this year relative to last year, South Africa could, for a change, be one of the better performers. In other words, quite a big improvement that we foresee in the coming year relative to last year, partly reflective of these domestic developments. And so we're already starting to see some recovery. We think the second half of the year we'll see even more of that. So yes, we are quite constructive about the outlook for the rand this year.
Elna, how does South Africa then compare to other EMs?
Unfortunately, if we look at the levels of growth, and that was why I was emphasizing the change in growth, we're moving in the right direction. Growth differentials are improving. We have a solid story that means that investors can now credibly expect a 2% plus growth trend in the medium term, which we didn't have before. We for so many years now, we've had sub 1% average growth. So that's better. And in terms of this year, the growth differentials will improve, but unfortunately, we are still at this stage just talking about 2 to 2.5%. So it's better, it's reasonable, it's solid, it's backed up by credible policy reform, but it isn't enough yet. And relative to so many other emerging markets, it isn't particularly attractive.
Great to get your insights on this morning. Elna Moolman, Group Head of South Africa Macroeconomic Research at Standard Bank. Elna, thanks so much for your time. And let's turn it back to the U.S. story. President Donald Trump used his Davos address to ask Saudi Arabia and other OPEC nations to bring down the cost of oil. He's casting the push for more crude output as a way to heighten pressure on Russia.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately.
Well, let's get to the scene of where he did say that virtually. That's Davos, and speak to Bloomberg's Jumana Bersetchi. Jumana, you've been covering the story closely, the oil story. Trump wants lower oil prices. Will he get that?
Yeah. Yeah, well, Trump wants a lot of things, and we heard a lot of different messaging over the last 24 hours, particularly on tariffs. But maybe let's just talk about oil, since he brought it up yesterday. Direct comments at OPEC, and I think the expectation out of OPEC was the return of Trump probably meant that energy was going to be once again a high focus for the U.S. administration. And of course, President Trump did use his address at Davos to specifically bring up energy and take a little stab at OPEC Plus, telling them he would like to see oil prices lower. Well, the point is OPEC Plus have actually been trying to support low oil prices. The reason that oil prices are higher in the last month or so is because the initial catalyst was the Biden administration's decision to impose sanctions on some of those Russian tankers, exporters, and vessels. And so you could say the reason actually we've seen prices climbing in the last month is not because of OPEC Plus decisions, but actually because of the prior U.S. administration's decisions. So a bit of context there for you. But at least we found out a lot about what some of Trump's priorities are. He clearly wants to keep oil prices low because that's going to benefit U.S. consumers. He's calling on OPEC Plus to increase production. I think OPEC Plus would love to increase production without causing a substantial drop in the price of oil. And of course, Trump has been touting this drill, baby drill mantra. But the issue with that, and we've spoken to many executives in the field, is they're going to be focused on cost and discipline and returns to shareholders. So he may want to increase U.S.'s production from 13 million barrels per day, but it's probably unlikely to happen at the speed at which he wants. Perhaps the more realistic output for U.S. increasing production will be on the gas side, LNG, with the removal of the Biden-imposed ban for drilling on offshore plants. So all of this together, I think, means that the Trump administration clearly has a focus on increasing energy output, but at the same time, they don't want prices to go up too much, and U.S. wants to continue maintaining its clout in the energy world and sending a shot, really, to OPEC Plus yesterday.
Fantastic reporting and interviews on the ground there from our Jumana Bersetchi in Davos. Jumana, thanks so much for waking up early and bringing us some of your reporting from over there. Now, still ahead, Rockbank reports a full-year profit after tax of 2.1 billion dirhams, up 16%. We speak to Raheel Ahmed, CEO of Rockbank, next. This is Bloomberg. Now, let's just take a quick check at some of the stories that we are following this morning. Boeing has reported a number of stories that we are watching this morning, actually. Turkey has cut interest rates for a second straight month and signaled similar reductions at future meetings by tweaking its guidance. The central bank lowered its one-week repo rate from 47.5% to 45%. Most analysts expect Turkey will ease policy at the same speed at all 7 of the remaining MPC meetings this year. Boeing has reported fourth quarter revenue that missed estimates after last year's bruising strike that idled most of its aircraft production. Preliminary results show sales were $15.2 billion, less than the $16.8 billion expected. Boeing took a hit of over $1 billion as charges tied to the strike also updated on the impact from troubled defense programs. JP Morgan boosted CEO Jamie Dimon's pay last year to $39 million as the lender posted a record-breaking annual profit. Dimon's pay jumped about 8% from the $36 million he earned in 2023. Dimon has run the bank for almost 2 decades, and questions are growing over who might succeed him. Bankrupt Purdue Pharma and its owners have agreed to pay $7.4 billion to a group of U.S. states and other parties to settle long-running litigation over OxyContin's role in the deadly opioid epidemic. The deal comes after the Supreme Court last year rejected a $6 billion pact that would have protected Purdue's owners, members of the billionaire Sackler family, from any further litigation related to the addiction crisis. Reliance Group is building what may become the world's biggest data center in India, the latest in a blitz of global investments to capitalize on booming demand for AI. The company, led by Mukesh Ambani, is buying NVIDIA chips for the operation in Gujarat. Bloomberg understands it's expected to have a total capacity of 3 gigawatts, making it far bigger than any data center currently operating. And let's pivot to Nigeria. The country's finance minister says government reforms have stabilized the nation's economy and set the stage for the return for foreign direct investment. Wale Edun spoke to us in Davos.
Under the President Bola Ahmed Tinubu, Nigeria has stabilized the economy. It has taken back 5% of GDP that was being wastefully lost to the federal government and the fiscal authorities. And the long and the short of it is that some major steps that have been taken to achieve market pricing of petroleum products, market pricing of foreign exchange, thereby eliminating what were very wasteful subsidies, has set the stage for the return of foreign direct investors. The early signs are very, very positive. Already, Shell has announced a $5 billion final investment decision. Total Energies has announced a $3 billion total investment decision, final investment decision. And in the non-oil sector, we have, as part of our conversations this week, we have had investments, indications, and I won't say announcements, but definitely firm indications from financial payments, international financial payments companies, from companies that want to do public-private partnerships in the infrastructure area, as well as fast-moving consumer goods companies that are already in Nigeria that are investing even more.
What we're seeing is actually a trend that has started, in my view, almost 10 years ago. So the globalization as we knew it is, in my view, is a chapter that is actually fading away.
Yeah.
We're now in a new chapter, which is all about tariffs, borders, bilaterals will replace the global alliances or the WTO in nature. I still believe that the WTO rules should be the game, or at least the ground for trade. But in reality, most of what we see globally today is governed by the trade remedies, safeguard measures, monopolistic protection is the name of the game. All in all of these measures are inflationary in nature.
Yeah.
And that's what we're seeing. So globalization over the past 3 to 4 decades have produced massive economic growth globally, lifted hundreds of millions of people out of poverty. And the modus operandi, as we put it, was actually the most efficient way of production. Now, after COVID and after these measures that has been in action for 10 years and more of which will be in place with the Trump administration, we call it the resilience model, nearshoring, trying to bring it close. But all of these would mean that you're producing at a higher price, which is inflation.
Yeah, and interesting what you're saying about the push for bilaterals. I'll get to there in a second, but something else that I think is really relevant to Egyptian trade right now is shipping and the Red Sea shipping routes. You've got the Houthis saying that they're likely to stop the attacks now that there is a ceasefire in Gaza. What does that mean to Egypt? Because you really took a hit from all of the receipts that were coming through the Red Sea.
Absolutely right. I think the Suez Canal proceeds are down by 60 to 70%, which is massive. In a year like last year, it's a tough place to be in. I think with the ceasefire, we need to be cautious. We're cautiously optimistic. It's the first ceasefire that has been enacted for a long period of time, and it's still early to judge. I think the Houthis announced that they could stop their attacks on the ships. But all in all, I think we're cautious. We want to study it. We will talk to ship owners, or at least ship liners, and we will try to see their line. It's not going to be an immediate switch back to Suez Canal as we envisage. What matters for us as Egypt, as we've been always engaged in the negotiation to try to bring this ceasefire, is how resilient that is and what follows. And more importantly, what follows.
Let me ask you about the Egyptian economy. If we had been sitting here a year ago, the prospects for Egyptian economy were a little bit different. And then, of course, you had the big investment from the UAE into Egypt that turned things around. You had a series of reforms that the government started to introduce, a massive currency devaluation. How do you see the economic picture right now?
Let me give you the perspective of how we see the Egyptian economy, and I'll take it on a longer period of time. The Egyptian economy last 10 years followed 2 revolutions, 2011, 2013, almost 2 to 3 years of complete stoppage. The government stepped up its action to stimulate the economy. So the last 10 years' title is a government-led economic growth. And in doing so, the private sector share in investments went down from 70 plus to almost 24%. This government mandate is to bring back the private sector, is to make sure that we have a business environment that is conducive for the private sector to prosper, to grow, and to lead the economic development.
That was Egyptian Investment and Foreign Trade Minister Hassan El Khatib speaking to our Jumana Bersetchi in Davos. A number of great conversations that we've been having from Davos all week. But let's just take a look at where markets are positioned ahead of the trading day. We mentioned it's only been just about 4 days of the Trump administration, but a lot of headlines for the markets to digest. U.S. equity futures relatively steady, but of course we did see U.S. indices rally to new highs on Thursday. That's coming after we did see President Trump, of course, calling for lower interest rates, cheaper oil prices, and then a number of other headlines to focus on there. Eurostock 50 futures pointing upwards as well. What we did see on Thursday from Europe, we saw the SOX 600 rising to close at a record high. So potentially there is more upside for European equities. We're also seeing a number of assets reacting to Trump's comments overnight about potentially a softer approach towards tariffs on China. We're seeing Asian equities rising as well, and the dollar retreating ever so slightly. But that is where we leave it today for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.